everyone. Here we are, beginning of March again.
That's right. Hello. Welcome back to our monthly stats.
That's right. This is Rob Yastrzemski with RJ Homes.
This is Ankit with RJ Homes.
And we're going to go over February's Greater Edmonton area stats, just to give you guys a quick update. Overall, how are things looking?
Up. You know how it is. If you followed our previous update for January, we predicted it's going to go up, and that's exactly what's happening. So again, for viewers' discretion, we are going to look down to view some stats, but everything will be posted.
All of these will be
on your screen. We'll ask the hey, Mr. Editor, please put it on the screen for everybody to follow along. With further ado, let's get into it. We don't like people to wait, and let's start with everyone's favorite, the average home prices. Rob, what's the update?
Home prices. So on average, and remember we're discussing the whole Greater Edmonton area, not just Edmonton itself. So this will typically be higher for just the city of Edmonton. But when we're taking into consideration the whole Greater Edmonton area, the average home price is now at $450,000.
$450. There you go.
What kind of home is that?
Well, that's like a typical 3-bedroom, 2-bathroom home with a garage, and a backyard, two-car garage and a backyard or front yard. So, still very reasonable. We're still one of the most affordable cities in Canada when it comes to bigger cities. By far. And so $450,000 will get you your home here in Edmonton or the Greater Edmonton area.
We actually hit right on average $450,000 for the Greater Edmonton area. And remember, to our viewers, when we say average home price in residential, this means every category. So whether it's a vacant lot, whether it's an apartment style condo, or whether it's a luxury home, that takes everything into consideration in this price.
Yeah, sometimes the data can get a little skewed, but still $450,000 is a great price point here in the Greater Edmonton area, depending upon what you're looking for, right? Having said that, let's compare it to the last month. So we did increase by 2.6%, is that it? Yeah.
That's right.
As compared to January and compared to last year,
10.5% increase in price, people.
So 2024 February versus 2025 February, we have increased our price point by 10.5%.
That's amazing. Now, just to refresh everybody's mind, if you haven't seen the video that we did on our forecast, which was the predictions, both in 23 and 24, the forecast was somewhere around 1.5 to 2%. And this year was no different. The experts are forecasting about the same. And we have surpassed that only by 10x.
And if you're curious about the prediction versus our prediction, we have another video in which we are talking about the experts' prediction versus what we think. So if you're curious about that, go ahead and check out that video. We'll ask the editor to put the link below as well, right? So. As we always do, let's go through each and every category, talk about the average price point, and feel free to comment and tell us which price point do you think, which category you're most interested in, right?
Yeah, we do. That's a good point. We do read all the comments, and we'd love to reply to every one of you guys. And so we do look forward to seeing those comments. So next in line for the next category is the new listings. What do we have for February?
So no, Rob, we're going to go through the category for average price for each category.
Oh. Okay. Yeah. Right. Okay. Let's back up a little bit. So when we are talking about the average price for all the categories, that's $450. But now we're going to break it down into the type of home, the type of category. So let's start with the most expensive first.
Detached.
Detached homes. Yeah. What do you think?
Most of the buyers that we talk to on a daily basis have the concept of a detached home. So I think that will resonate with the most viewers here. So
agreed. That's the ultimate goal.
That's the ultimate goal after all, right? So average price of $568,000. It's getting there, very close to that $600,000 price point. Significant increase as compared to last month, Rob, or is that a little increase?
So last month. So when we were saying last month, we mean January versus February. Not a huge increase, 1.2%.
Yeah, we were at $560 if my memory serves me correct. So $8,000 increase in 30 days.
Still pretty good.
Still pretty good, but if you watch the last video in December versus January, we had a $20,000 increase. So that increased from 540 to 560. Now it increased from 560 to 568, which is a good news for the buyers. It's not a $20,000 increase every month over month, thank God. So 1.2% increase, that kind of shows that the market's kind of
trending
upwards for these detached homes. But if you compare it to last year.
Now, this category alone, this is that detached home, average home price all the way from the starter home that's detached all the way up to the luxury segment. We're talking almost 12%, 11.9% increase year over year between 24 and 25 in February. That's amazing.
That's amazing. So if you were to buy a detached home last year, you would have gained 12% equity on an average on your home. I mean, every situation and neighborhood is different, but all over, it's a good sign as an investment.
Let's keep the numbers simple just for an example. If you were to buy a $500,000 home last year, you would roughly gain $60,000 just in equity from last year to this year.
Wow, that's like a 1 year salary.
Yeah, that's pretty good.
That's pretty good.
Just for buying a house.
So that's good. Right, so moving on to the semi-detached, that's my favorite segment, the half duplexes, semi-detached, everybody calls it a different name. Did not see any change almost as compared to last month, so we're staying put at $421,000, right? But
last year, we had a lot lower prices. Again, this segment is very active. Those duplexes tend to be the next second choice if someone's got a lower budget and they still need the space, they still want to have a home, and they don't mind sharing one wall. They get a lot more bang for their buck, and approximately $100,000 difference.
Yeah, it's almost like $140,000 difference between a detached home and a half duplex. Having said that, they generally tend to be the similar sized properties. Most of them have 3 bedrooms, 2 bathroom, garage, and a yard. So it's definitely a great starter home or an investment home. There are some half duplexes with condo fees in it, some without condo fees. So it depends upon each and everybody's requirement and interests, right?
That's right. Yeah, and this category did very well between last year and this year. Also, 9% increase from February 24 to February 25.
9%.
Very active category.
And you'll see this trend, like if we compare our home prices compared to last year, there's significant improvement in price in terms of gaining value and equity. Townhomes actually saw a reduction in the month over month. So as compared to January, we are standing at $301,000, which is about a negative 3% decrease.
Yeah, and again, it's stats. So what happens is these stats are all about the sales that happened in the month of February. It just happened to be that this month of February, there was more sales in the lower priced category of the townhomes.
Correct.
Where we're actually in a little bit of a glut when it comes to the amount of brand new construction townhomes that are coming on the market. They're not quite ready for possession, so the sales haven't quite happened. So we're just dealing with mostly stats of older, lower priced townhomes. That's the only difference. And you're right, it went down by how much?
3.5%.
Month over month, but it actually went up year over year by
9.1%. So
again,
if you're a homeowner who bought a townhome last year and you were hoping to hear good news, don't worry about month to month. Compared to last year, you still made 9.1% on an average. On
another active category.
Very active category. I think another thing is, as Rob mentioned, is the amount of new builds that's happening in townhomes. They are getting ready, not available for possession yet. But so as we further move along into the summer and the fall market, I predict that this number is going to be huge.
Oh, it's going to go up for sure, a lot, right? For sure.
Well,
but without selling the next category short, this is also a very active category.
Well,
which one is that?
Yeah, this year I've seen tremendous chatter and increase on this particular segment. So the apartment category. So we saw a very significant increase, 7.3%. We're all
month over month
as compared to January. So as compared in 30 days, this segment increased by 7.3%. we are standing at 217,000 right now, Rob.
So that's an average apartment style condo. That's taken into consideration the whole greater Edmonton area. It doesn't matter if it's in a really tiny little town where you can get a lot of bang for your buck, or right in downtown Edmonton where you're paying, well over $1 million for a luxury apartment. That takes into consideration all those.
And Rob, as compared to last year, this data will blow you away. Yeah, Rob, what's
incredible.
The numbers?
So apartment style condos typically in the greater Edmonton area do not do as well.
This and is not sometimes we see negative returns.
Right. This year, however, year over year, when we're talking compared to February 2024, almost 20%, 19.9% increase in price. This is incredible.
Crazy.
Incredible.
I never thought that.
Great investment.
Yeah, great investment.
We wouldn't have thought that here in Edmonton
versus
Vancouver or Toronto, but right now this category is the lowest price category as far as anybody entering the housing market to ownership.
And similar to townhouses, there are getting new developments.
Absolutely, lots of them.
So you can actually get brand new townhouses in this price range. Apartments in this price range. So definitely worth considering if you're a first-time home buyer or an investor who wants to be hands-off and have the apartment complex take care of the tenants. So these are
and brand new construction apartment-style condos that can be purchased for under $200,000. This is incredible. Still an amazing investment. Still highly recommend if you can afford to buy. Way better off than renting, because eventually you will see your investment increase in value tremendously, just like it has.
Yes. And if you're concerned about condo fees, like the newer the better. These new townhouses and apartment buildings have very low condo fees because they're brand new. It's not much of repair or renovation happening anytime soon. So they're pretty future friendly as well, right? So, that's right. Well, that kind of concludes the average home pricing. Yeah. But hey, listings, what's happening there?
Yeah, let's kind of dissect exactly how this has all come about. So we'll go through the listings.
Yeah.
So February 2024 versus 2025, no surprise here. We've had an increase. What are we looking at for month over month?
Yeah, 13.3% increase as compared to January 2025.
No surprise.
So 2,723 is the current number of new listings in February, right? But while we compare it to last year, Rob, the numbers looks a little different.
Yeah, so year over year, we actually had a slight decrease in inventory. So February 25 versus February 24, we had a little less than, 0.5% lower amount of new listings. So it just goes to show you we have tremendous pressure on our inventory across the region. And that's affecting sales as well.
Yeah, even last year we were kind of struggling with the number of homes that were coming in the market. And this year it is even 0.4% less than last year. So that kind of shows you that we are still on a very, very limited inventory market. The arrow is skewing more towards the seller market day by day as we are progressing as compared to last year. So year to date, Rob, what's our current number?
Yeah, so year to date right now, we total, including what was already listed, is 5127. But the amount of inventory we have, or that was calculated for the month of February, is 4157. So not very much.
Yeah, and this directly dribbles down to the number of sales that we are happening. So, if there are less homes to sell, what happens to the sales?
There is less sales.
There's less sales. So, although what you'll see is the month over month, the number of sales increased, but year over year, that will be a different story. I'll let Rob run those numbers too.
Yeah, so when it comes to numbers of sales, we had a total of 1,825 sales in the month of February for the whole greater Edmonton region, which is an increase of 14.3% as compared to January. Again,
Makes sense.
Surprise.
There are 14% more listings and there are 14% more sales.
Yeah, exactly.
Makes sense, right? Well, year to date, 3,421 sales. But as compared
for the first 2 months
of the year, but as compared to last year, this is a reduction by 7.1%. I hugely contributed because of the lack of inventory.
Exactly.
We are currently working with buyers. They have money, they know their criteria, but they don't have a home.
Yeah, we actually are experiencing the same thing with the sellers. The sellers are ready to sell their homes, but they're afraid to sell because there's nothing for them to buy. So everybody's kind of in this holding pattern, waiting for that inventory to increase. So that's affecting our sales for the year. So year to date, we're at 3421, like you mentioned, but we're actually down by 7.1%.
That's a lot. So 7% decrease in the number of home sales is a lot when talk about bigger numbers, right?
But that's all attributed to the lack of inventory. We have sellers that are ready to sell that are just can't, because they don't want to be stuck without a home. So they're waiting for that new inventory to come up. So the same old story is coming up, that we've got a lack of inventory, meaning that we're having pressure for the prices go up. As soon as a decent home comes up, it gets sold very quickly.
Very.
Prices tend to go up.
Yeah. So currently, what's our inventory number of?
4157 for the month of February.
Not bad, I remember.
Not bad, but on average, the last few years is not bad.
Not bad.
But if we're looking at an average balanced market, we should be seeing triple that. We should be in that double digits.
Double digits, yeah.
10 to 12,000 is where we should be.
Yeah, that's okay. We're just 7,000
low.
7,000 home short with our current demand. So if you were just curious and thinking about, hey, what's going to happen in the market, these kinds of numbers just tell you the way it is, because these are facts. And facts state that we have low number of inventory, we have high demand. So the future looks like we're going to have more increases in prices unless more sellers start selling, but then those sellers are going to buy too. So it's kind of like a cycle. So we still kind of feel that there's going to be a significant uptick in the market as we get closer to better weather. The market's going to get hot, not just the weather. So.
Yeah, we typically do see more sellers put their homes on the market in the spring. You know, they're all typically waiting for the grass to be green and the flowers to be blooming and all that stuff. So it's coming. We're going to see that. But nevertheless, we do predict it's going to be a very, very busy year, with a lot of buyers having to compete with other buyers for these few listings that are coming on the market.
Can't stress enough, if you were planning to make a purchase anytime soon, let's say in the spring market or the summer market, start talking to your realtor already, start talking to your mortgage broker already, have a proper action plan in place, because you will be in a position where you might be trying to beat other offers. So
so there's going to be a lot of opportunities in the market, but Ankit's 100% right. You need to be prepared. You won't have time to be thinking about doing your mortgage pre-approval after you see a home that you like, because
you won't have time.
It's going to be fast.
You won't have time. So
that's right.
You've got to be prepared, right? So,
and that's what we're here for. So if you do not have a realtor that you're working with, contact us. We'll be happy to go over all the details with you. This is, of course, just a general overview. We will sit down with you and go over the details of what's important to you in your segment of the market. That way you're 100% prepared.
Yeah, absolutely. Rob couldn't have put it better. So yeah, if you're even remotely curious, we're here to answer any questions and put you in the right path, at least.
Yeah.
Right? Even if you were planning way down in the future, at least you know what to do.
The general consensus is the sooner the better. As a buyer, you're going to see that prices are going to continue to increase as the year progresses. So the sooner you can buy, the better, so that you can start gaining that equity in your home as you have already purchased it earlier. So.
Exactly.
Yeah.
Right.
Let's do something fun.
Yeah, let's do it. So another one of the categories that I love is the high rollers. Let's talk about the highest selling home in different categories, right? So let's start with the detached. So a detached home got sold for $4 million.
$4 million.
That's just in February, by the way.
In the greater Edmonton area, we don't typically see these numbers. We usually see maybe 1.5 to 2 million. This is a $4 million property that has sold in the greater Edmonton area. And this, again, just to remind everybody, this includes all the categories of detached homes, right from the detached homes with detached garages all the way to luxury homes and acreages, for that matter.
Well, there better be a luxury home at this price point.
Better be.
Just letting everybody know, there's no commercial plaza. We're just talking about residential. real estate, right?
Yeah, so this doesn't include farms.
So
just residential. So this is either a single family home in the greater Edmonton area, or it's an acreage. Country residential home.
Country residential home. And that acreage is not used for anything else like farming. It's just
residential.
Just residential, right?
Yeah. So next category?
Half duplex.
Your favorite.
That's right.
What are we looking at? What's the high roller for February?
$754,000.
That's pretty nice duplex.
You know what? I'm not surprised by this number. No more.
Why is that?
I've seen more and more luxury duplexes coming up, and I've actually seen a lot of my clients preferring them over a single-family home, just lower maintenance. Most families like to live together, and they buy side-by-side duplexes too.
Right. That's a good point. Some of them do buy the side-by-side. They want to have that separation, but they also want to be close.
Yeah. So
Good point.
Townhomes,
another very, very active segment of the market, and this time the highest price sale that we have is $540,000 for a townhouse.
Per townhouse.
Row house.
Yeah.
So incredible.
Yeah.
What's really incredible is the next category.
Oh yeah.
This is amazing. For the Edmonton area, you don't see too many of these.
Yeah, again, I've seen some immaculate structures and condo buildings and with some crazy amenities, but this price always kind of is surprising. Right? So $1.375 million
for an apartment.
Yes.
Apartment in the sky, guys.
Yeah. So that's more than our semi-detached and the townhouse combined.
Yeah, and if you think about it, we just went over the average price for an apartment condo, and that was just over $200,000. So this just goes to show you just what kind of a luxury apartment-style condo this could be.
Absolutely.
So next on the agenda, what are we looking at?
So average days on market. That's a very big significant. Also, how fast the market is moving and how the demand looks like. Significant changes in the average days of market as compared to last year, right? So let's talk all residential first, like on an average, like we always do. So average days on market in February 2024 was 50 days.
This year it's 37. So that's if you consider just how much that has gone down, that's almost 20%. Shorter amount of days on market versus just last year. So typically, just so that the viewers know, on an average balanced market, these are somewhere closer to 75 days.
75 days.
Almost double.
Yeah. So
amazing.
I think those days are gone.
Well, at least for the foreseeable future.
Foreseeable future, right?
Yep.
Then let's talk about apartments. Apartments generally tend to sit longer, but not anymore. As we have seen, the prices have gone up. That means the demand has gone up, and that means the number of days on the market have gone down. So we were at 65 days, so almost like 2 months last year, and this year we are at
back down again, 48, below 50 days on market for an apartment style condo. Just to put this into perspective, typically these days are somewhere around 120.
120, that is correct. Yeah. Detached home, not surprised. It was 48. We are down by almost 10 days.
Yeah, 39 days on market this year as compared to last year.
Yeah. I'm curious to see what happens next month, because I think it's going to go even lower as buyers are putting unconditional offer these days. So.
They are. A lot of unconditional
offers, right? Wow. The townhomes. So the average days were 45.
Last year.
So almost half.
This year, 28 days on market. This is incredibly short amount of time. And we're talking about the townhome category. This is typically a very active segment of the market, but usually it's at least double that. For how long it takes to sell.
That kind of shows you the demand for townhomes in our market, and then half duplexes even crazier. We were at 41 last year. This year we are sitting at
less than a month, 26 days on
not
market.
Even 30 days.
Crazy.
Wow. So that means this kind of segment is getting the most amount of maybe short condition periods or unconditional offers. Because as I said, I think a lot of families are putting in these offers, and they're trying to buy either side by side, front or back.
Well, and you get a better bang for your buck, because if you are, if you need, say, a certain size of home, let's say the average size home somewhere between 12 to 1,500 square feet, 1,800 square feet, maybe even, and you're looking at 3 bedrooms, 2 bathrooms. You need a double garage, attached or detached. you know, that's a significant difference in price from a detached home to a duplex, semi-detached, and then again to a row house, townhouse.
Yeah,
they're all about the same size, but about $100,000 to $150,000 difference between each category.
And Rob, correct me if I'm wrong, but these half duplexes tend to be a little bit more on the newer side, as builders are demolishing like the older homes built in 1920s, 1930s, 1800s, and they are constructing these duplex structures over there, right?
Yeah, big lots. So these are infill properties closer to already fully developed neighborhoods,
already mature neighborhoods, already close to schools, all the transits, and you get a brand new home.
That's right.
Taxes are cheaper too.
Yeah. So you know what? Overall, no matter what category you're in, if it's a residential category and you're looking in the Greater Edmonton area, if we can only foresee prices continuing to go up. The inventory level is much lower than we typically see, and as far as the future goes, the sooner the better. That's always the advice, at least for the foreseeable future. If you're a buyer and you're considering purchasing this year, if you can make it sooner, highly recommended.
Well, there you have it. And that concludes our 2025 February market update.
Stay tuned for March. I'm really interested in that. That's when things really heat up, not just like you said, not just in the weather, but with our market. February is just still one of the colder months, and now March is going to be very busy. April, I'm guessing, is going to be super busy. So I can't wait to update you guys on those statistics as they come out.
Till the next time, guys. Cheers.
Take care. See you then.